Ever wish you could just, like, sit down with Warren Buffett for a coffee chat, you know?
Oh, yeah.
And just pick his brain about business and investing.
Absolutely.
Yeah. Well, today's deep dive is, like, the next best thing.
Okay.
We are cracking open his 1988 letter to Berkshire Hathaway shareholders.
Okay.
A total gold mine of just timeless wisdom.
And you know what's so fascinating about this particular letter is how relevant it still feels even decades later.
Right.
It's like Buffett had a crystal ball or something predicting challenges we're still dealing with today.
Yeah, like he saw the future.
Yeah,
Okay, so 1988, Berkshire's on a roll, right?
totally.
Net worth jumps 20%.
Yeah,
24 years of just killer growth.
impressive.
But right away, Buffett, he kind of hits the brakes.
Oh,
Warns investors not to expect that every single year.
he's like, don't get used to this.
Right, and he uses this analogy to drive the point home.
Okay.
Imagine like a 42-year-old athlete, trying to relive their glory days.
Oh, wow. Yeah.
It's just not realistic.
Yeah. Have you ever felt that pressure, though?
Oh, yeah.
Like in your field?
Yeah.
To just keep hitting those new peaks?
Totally.
It's something Buffett constantly had to deal with as Berkshire got bigger.
It's that, like, what have you done for me lately thing
Right, exactly.
with investors.
Yeah.
But Buffett's making a case for the long-term perspective.
Okay.
He's not saying growth is over,
Right.
but he's saying, here's the challenges we're facing. Like, acquisitions are getting pricey.
Yeah.
The stock market isn't what it used to be.
And that leads to one of the big themes in this letter,
Okay.
is what Buffett calls the problem of too much money.
Which, honestly,
Okay.
don't sign me up for that problem.
Right. Who wouldn't want that problem?
Exactly.
But for Buffett, it was this constant pressure cooker.
Really?
Berkshire's capital base was growing so fast, he had to find these huge wins just to maintain their 15% annual return.
It's like trying to steer a cruise ship instead of a speedboat.
Yeah, you need a lot more room to maneuver.
Right, exactly.
But here's where it gets really interesting.
Okay.
Buffett introduces us to Berkshire's Sainted Seven. This group of businesses just crushing it in terms of return on capital.
Okay, so we're not talking tech here, right?
No.
Not at all.
What is this furniture?
Furniture, uniforms, even encyclopedias.
Encyclopedias. Wow.
Yeah, these aren't exactly like the hot new startups,
Right.
but they were making serious bank.
So what's the secret? What do they have in common? Two things. Rock-solid business models. And maybe even more importantly, incredible management.
Okay.
Buffett talks about these managers constantly in the letter.
Yeah.
He emphasizes that his whole approach is to find the best people and just let them run their businesses.
Trust.
Exactly. Trust their expertise.
Yeah.
Give them the freedom to excel.
That's a good lesson for anybody, right?
Absolutely.
Find the right people, get out of the way.
Exactly.
But Buffett doesn't just talk business and investing in this letter.
What else is there?
He goes into a topic that honestly makes a lot of people sweat.
Oh, no. What's that?
Accounting.
Oh, boy. Accounting.
But this is where his commitment to transparency shines through.
Okay.
He goes above and beyond, explaining complex accounting rules in plain English.
Wow.
He even calls out the dangers of earnings manipulation.
Which is basically just dressing up a used car to look brand new.
Right. It might fool some people at first,
Yeah.
but eventually the truth comes out.
Exactly. And Buffett saw this happening a lot.
Oh, yeah.
He called some executives charlatans, basically.
Wow.
So they were using accounting to hide reality instead of showing it.
He believed in honesty and integrity, especially with money.
Absolutely. It's about building trust. Right.
Especially for a company like Berkshire.
Right, where investor confidence is everything.
Exactly. This transparency, it's not just about the numbers on the balance sheet, though.
It's deeper than that.
Yeah, it's about how Buffett thought about the people running his businesses.
About the culture, the values.
It's all connected.
Yeah.
But let's shift gears a bit.
Okay.
Talk about one of Buffett's more interesting investment strategies. Arbitrage, ever heard of it?
Oh, yeah. In a nutshell, it's about profiting from price differences in different markets.
Okay.
It's like finding a hidden discount aisle that only you know about.
Yes, like that.
Yeah, and Buffett explains it brilliantly in this letter.
Okay.
Why it appealed to him, especially when Berkshire had cash to burn.
And he even tells this great story
Oh, yeah.
about one of his early arbitrage wins involving cocoa beans.
Of course, cocoa beans.
Right.
But this wasn't just any cocoa bean deal.
Okay.
It was pure Buffett spotting a market inefficiency.
Okay. I'm intrigued.
So this chocolate company was trying to unload a ton of cocoa beans
Okay.
for tax reasons, basically a fire sale.
Wow.
And Buffett being Buffett, he saw an opportunity.
Buy low, right?
Exactly, buy low. But here's the thing.
What's that?
He knew that accounting rules and the real market, They weren't always on the same page.
Interesting.
He knew those beans were worth more than the chocolate company was letting them go for.
So he bought them.
Snapped them right up, and then he waited.
Or what?
For the market to catch up to recognize their real value, then he sold them for a profit. Simple but brilliant.
So it's like finding a $100 bill on the sidewalk.
Exactly. You're not going to just leave it there, are you?
With a chance.
But here's the thing about Buffett.
What's that?
He wasn't just chasing those quick wins.
Okay.
He had a system, a more strategic approach to arbitrage.
So less about being the fastest gun in the West.
Right. Less about being reckless.
Oh,
It's more about calculated risks.
Got it. So he's at the casino, but he's playing chess, not slots.
Exactly. He's playing the long game, and that ties into another fascinating part of this letter,
Okay.
where Buffett takes on this idea called the efficient market theory.
Which basically says you can't beat the market.
Yeah, it's like saying the score of a game is already decided before you even start playing.
And Buffett's response is,
Oh, he completely dismantles it.
of course he does.
And he uses Berkshire's success as proof.
It's like, look at our track record.
Exactly. We've consistently outperformed the market because we find those undervalued companies.
He's saying the market isn't always right.
Yeah, he believed that while the market is often efficient, it's not always perfect.
And that's where his patience comes in.
Absolutely. He wasn't about following the herd or getting caught up in the hype.
He's got ice in his veins.
He even suggests that investors should be grateful for the efficient market theory
Why is that?
because it gives them an edge if they're willing to put in the work.
It's like he's saying, let everyone else believe the market knows all.
Exactly. We'll stick to our principles, find the hidden gems, and let the results speak for themselves.
And those results speak volumes.
They sure do.
Yeah.
But he also acknowledges that even a strategy as potentially lucrative as arbitrage isn't foolproof.
Right.
It takes discipline, careful analysis, and a good dose of skepticism.
It's not a get-rich-quick scheme.
Not at all. It's about making smart decisions based on solid research and really understanding the market.
And that leads us to the final part of the letter,
Okay.
where Buffett lays out his vision for Berkshire's future.
He's got his recruiting hat on.
He does. He's like, if you've got a business to sell, give us a call, but
But there's a catch. He's very specific about what he's looking for.
picky buyer.
The pickiest.
Okay, so what makes the cut?
Think solid businesses, consistent earnings, strong management, and simple operations.
So basically, he's like, if you're a new venture looking for funding,
Yeah, or some crazy turnaround situation.
he's not interested.
Not even a little bit. He wants companies that are already killing it. No fixer-uppers.
He even compares Berkshire to a dog breeder.
Oh, yeah, what's that?
He's like, we only want collies, not Cocker Spaniels.
He knows what he likes,
Exactly. And it goes back to one of Buffett's core beliefs.
which is
Find exceptional managers and let them run the show.
all about the people, right?
Right. He knew a company's only as good as the people at the helm.
So true.
He wanted leaders with a proven track record, not just fancy degrees.
Results matter more than resume.
Exactly. And he gave those managers something incredibly valuable, trust, autonomy.
He wasn't looking over their shoulders every 5 seconds.
Right. He wasn't a micromanager. He gave them the space to lead.
That's huge for any leader to learn, right?
Oh, yeah. Find the right people, give them the tools they need, and then get out of the way.
Harder than it sounds, though, right?
It is, but it's a key takeaway from this letter.
Along with,
The importance of long-term thinking.
Buffett was playing the long game.
Always, he wasn't chasing quick profits or the flavor of the month.
He was thinking years, even decades ahead.
Investing in companies he believed in for the long haul.
It's about delaying gratification.
Which, let's be honest, can be really tough.
In a world of instant everything, right?
Right. We want it all, and we want it now.
But Buffett's approach, it's about playing the long game.
It's about building something that lasts.
Couldn't agree more.
So as we wrap up this deep dive into Buffett's 1988 letter,
What's the big takeaway?
I think it's this true success, whether it's business investing or just life.
Yeah.
It comes from finding the right people, making smart decisions.
And having the patience to let those decisions play out.
Exactly. It's a simple formula, but not always easy to follow.
Definitely not. But hey, if Buffett's track record is anything to go by,
Right.
it's a philosophy worth trying.
Absolutely. And even though this letter is decades old,
Crazy, right?
it's like those principles are just timeless.
They are.
But before we go, I want to leave you with one final thought.
Okay, sure.
Buffett constantly stresses finding those exceptional managers.
But once you just get it.
Right. So my question to you is,
Yeah.
what makes a great manager?
Ooh, good one.
And how can you cultivate those qualities in yourself and in others? Something to think about.
Food for thought until next time. Happy investing and keep diving deep.